Hello, folks. It is Thursday, April 11th, 2024. Let's get into the markets and our recap for the day today. Exciting day in the markets. Some interesting technical things to take a look at. So we're going to take a look at some charts and some of the underlying technical reasons that I'm really not too worried about this little current move that we've had, which was raced a little bit today as well. So I'm going to talk about that, what's going on in the markets. And beneath the surface, we'll talk about some of our trades, of which we had a couple nice things happen today. So we added some more gains to our account. Today, we'll take a look maybe at the account as well and get a sense of where we are and what things look like. So lots of stuff to cover today. I was on vacation this week. I haven't shaved, as you can see, but I was on vacation this week, had an emergency, had to fly home from the vacation, but everything is all good there. But cut it short, more disappointed that I had to leave all of my neighbors in the community, all of my food and my beer. So that was probably more disappointing than anything. So anyway, didn't quite get the tan I want, but we're back in vacation in a couple of weeks anyway, which is one of the luxuries of being able to trade for yourself. And trading's in a way that you don't have to sit there and watch the markets all day long. Well, we did some training today. So before I jump into the actual trading for today or the training for this evening and look at some of the charts and accounts and how we did, I want to point out the video that I posted earlier. So I did do a video with our members in the Income Navigator service. I did post that live in public as well, so anyone can get a sense of what we do. And today's training was really on a couple of reasons that people don't get success while trading, and really covered 5 of the reasons that more people aren't successful. And we know that 90% or so is the number people float around. 90% of the people that take up trading fail. Why do people fail? Well, there's a couple reasons for that. And you can watch that video. So if you go down below and you check out some of the other YouTube videos, especially the one from today, we really went over this pretty well in depth today for about 30 minutes or so. But I'm going to recap that here before we jump in. And number one reason that most people fail, and this is why 90% of the people fail, 10% break even, maybe make a little bit of money. And of that 10%, there's a small percentage of those people that have consistently beaten the markets or been successful over the long term. It is easy to start your YouTube channel or your trading this year or something like that when the market's only going up and your markets are up 12% or something in the first 3 months of the year. Pretty easy to be knocking out gains left and right. But where were you in 2023? Where were you in 2022, 21, 20, 19, 18? Consistently over time. This is my 36th year or so of trading. It's a long time to be out there and a long time to be evolving and trying to be successful and trying to stay consistent. And I haven't been consistent all of those years. Okay? I've had my ups, I've had my downs. I've lost more money than some people will make, but yet I'm still doing pretty well and consistently really honed in on what I'm doing. And it was more so when I built a really good trading plan and stopped just chasing the Holy Grail out there. And there's a lot of that chasing going on. There's a ton of people on Facebook and YouTube and everywhere else that you can go posting great wins and great trades. Well, it's easy to post wins, like I said, when the market's going up. It's going to be much harder if we have a 10%, 12% correction than a 10% bull market. And then we'll see how everybody's doing. However, okay, what makes you a successful trader is being able to do this consistently over the long run. And having a trading plan is the number one reason I think many people fail. Okay, it may not be the very top reason. I'm just saying number one of the couple that we talked about here. Number one, you just don't have a trading plan. You're bouncing from strategy to strategy. You haven't defined your why. Why do you trade? What's your risk management that you want to employ? What are the strategies you want to be employing? And how do you get in and out of each of those strategies? And one of the comments I made today is that if you can't write on the back of a business card, you can't write on the back of this business card your trading strategy for each of the strategies that you employ, it's too complex. Okay. If you can't easily tell somebody, here's how you get in, and here's how I get out, and here's how I set up the trade. If you can't put it on the back of a business card, or maybe a 3x5 note card or some index card. It's too complex. Okay, simplify your life, but have a trading plan that you can follow. Number two, it's strictly discipline. Okay, maybe you have a trading plan, but you didn't follow it. And I've seen more than enough posts in the last couple of days of people that are losing money. My gold strangle is killing me, my copper strangle is killing me, and I've lost money on this, and now my bonds trades with the bonds going down is killing me. Okay, why? Okay, why is this killing you? Well, did you stop out? No. What was your stop? Well, it was 2x, but I thought it was going to reverse. So now it's like a 3 or 4x or 5x. Okay, problem number one. Okay, you're lacking the discipline to follow your own doggone plan. Okay, number two piece of that is, did you size appropriately? And really the one other key piece that I want to focus on today of why people fail is you really don't have a management strategy, a risk management strategy. How much money are you going to assign to each trade? How much money are you going to risk on each trade? Assuming that you hit your 2x stop, what is the percentage of net lick for that trade? Okay. If it's more than 2% or 3% or so, that's probably a little too much. Okay. If you hit a 2x loss and you just wiped out 5% of your account, you're trading way too big. Okay. Your trades are too big. Okay. Now, I get if you have a small account, it's a little tougher. You might have to take a little extra risk, but with most accounts, most good traders out there are risking 1, 2, maybe 3% of their account on any particular trade. Okay. That's what we're doing as well. Okay. For me, okay, I'm going to risk 2%. That's my target in my main trading account. Okay. If it's in an IRA, I'm risking 1.5%. Okay, or so, or maybe 2%, but that's about it. Okay, I'm not risking 5% or 10% on any. I've seen some videos where, yeah, we don't want to allocate more than 10% of our trade. What? 10%? Okay, if you're sitting on a 400, 500, 600,000 dollar account, you're willing to lose 50 grand on one trade? Okay, I'm not. Okay, I'm willing to lose 2% of my net income on any one trade. Okay, I had yesterday we had a bond ratio spread. And I hit the 2x stopped out. Okay. It was a 0.5% loss to my total account because my spec trades are sized at usually 0.5% all the way up to 1% of net lick. That's it. Spec trade, maybe 1%, most of them 0.5%. I lost a trade. Okay. I lost 0.5% of my account in one trade. Other people lost 2, 3, 5% of their accounts in one trade. Well, it's craziness. So a lot of reasons people fail, besides not having a plan and defined set of consistent strategies, okay, and failing to adhere to those and having the discipline to follow your plan and remove the emotions in trading, okay, is that your risk management is way off center. You're risking too much, sizing too big, okay, and you're not adhering to potentially what could be a devastating piece to your account because you're not adhering to your stop losses or your profit targets as well. Maybe you let your profit target run and then it reversed and now you got a smaller profit. Every single one of my strangles is sized the exact same way. It doesn't matter if it's ES. It doesn't matter if it's bonds, ZB or ZN. It doesn't matter if it's the Aussie dollar. It doesn't matter if it's RTY or the Russell. It doesn't matter if it's oil or gold or copper or any of those. Every single strangle is sized the exact same way. Why? Because from a positive expectancy standpoint, if I lose one, it's only going to affect a couple of other trades if I size them all the same. If I size too big and I lose that one and it wipes out 6 or 7 trades as opposed to 2 or 3 or 4, okay, that's a devastating loss. Going to wreck your positive expectancy. Okay? A couple people have told me that they're not keeping their sizing the same. That's a problem if you're trading a strategy like strangles that requires constant setting of it to let the positive expectancy play out. So if you don't let the positive expectancy play out, okay, over time, you're never going to be successful. I'm a campaign trader more than anything. I like to keep trades going, like the ES trade. Okay. The long-term ES 112 trade, that's my core strategy. That is a campaign trade. Everything else is a discretionary trade, but it's based upon positive expectancy. It's based upon, I know what the results will be over time if I consistently put this trade on, not campaign style, but consistently put trades on that adhere to my criteria, and I size them all the same. So whether it's a gold trade, oil trade, copper trade, bonds trade, S&P 500 trade, no matter what the trade is, they're sized exactly the same. So if one loss, okay, doesn't wipe out more than a couple of other trades, okay, they're sized correctly. The other problem is if you're taking profits early, which I have done a couple of, okay, but if you're taking profits early consistently, then one loss sized appropriately can wipe out 6 trades because I took my profits at 30 or 40% versus 50%. I like to let my trades run for the most part. I will take things off early if it makes sense. Okay. If it's quick and I can get a new trade on, that's fine. Okay. But I don't like to take something off at like 40% or 35% or something like that. I would rather wait till 50% because if you do that too often, okay, yes, you're adding more wins, but B, that one loss is now going to wipe out more of your wins. You're not letting the positive expectancy play out. So it's a good lesson for people that are experiencing, maybe some discomfort in their account because they've had 1 or 2 losses lately, and they've wiped out more trades than they expected because they either sized it too big, or B, they were taking some profits too early. Okay, and now you're wiping out a bunch of winners. Okay, you got to let everything play out from a positive expectancy standpoint. Okay, I'm pretty routine. I'm very boring. Okay, I'm stuck to a strategy and a trade plan, and I really don't deviate. And there's a lot of what if this or what if, there's no what ifs. It's in the trade plan. Okay, exactly what I will do when this happens or when this happens, and it's pretty easy. I don't get too complex. Well, if the delta gets to 30, then I'm going to roll it now. I don't do any of that. Okay. In fact, one of our members was sharing some, we don't roll. Okay. That's one of my rules is that I'm not rolling or adjusting my trades. I'm not rolling the untested side up. I'm not rolling a tested side out and down or something like that. Okay. Why? Because when you roll, you're booking a loss. Okay. In a bad trade. A trade has gone bad if you have to roll. Okay. So you put a trade on, it's not working out the way you thought. So instead of getting out and taking your losses, you're going to get out, take your loss, and then you're going to put on a similar trade with a worse setup in something that's already going bad. Okay. The definition of insanity is doing the same thing over and over and getting the same result. Okay. If you got stopped out, or if you're getting tested and a bond strangle at the bottom, and you want to just roll that out, okay, all you're doing is just putting something that's in a downtrend that's already going against you, and you're rolling it out. Oh, but I got a credit for doing that. Yeah, you got a credit for doing that, but you booked a loss, number one. You've got a small credit, a slight credit for the next trade that has to now overcome that small little credit, and it has to go completely against the trend that caused you to have to get out of the trade to begin with. It makes no sense. And one of our members was talking today about the fact that they put a trade on in bonds because it was going up. So he rolled the untested side when bonds were going up, rolled the untested side of the puts up. And then what has bonds done? Well, the Fed comes out, bonds sink, okay, due to an overreaction to the CPI report completely, okay. But news is noise, so I'm not going to talk about it, okay. And now it sinks, and now your rolled up puts are getting tested or breached because you rolled to roll it. It's craziness. So I'm telling you to stop, stick to your trade plan, just take the loss and move on. The other thing you're doing is when you're holding on for dear life here, the HODLs, of roll out and give yourself more time to be right. I want you to say that out loud. Okay? I want to give myself more time to try to be right. Okay? I didn't use the word hope, but technically it's hoping to be right as well. The trade's going wrong. The market's going wrong. It's going against you. So what you're trying to do is hope that the market stops doing whatever it's doing and goes the other way. And I'm going to hold on until I finally can show the market that I'm right. Don't try to prove the market wrong. It's always going to be right. Okay. But when you're holding on, what's the opportunity cost of the margin that you're tying up in the new ugly looking trade that you just put on so that you can prove the fact that you're right? I know I'm going off on a tangent here. Okay. I can't be more passionate about don't adjust, don't roll. It's a last resort, in my opinion, to do that. I'm not saying it can't ever win. Certainly it can. And I know facts and figures will show that at some point it could win. If I hold on to something long enough, I'll probably be right eventually. Okay? Probably. Okay, doesn't mean I always will be right, but if you hold on to something and you roll it long enough, you're going to be right eventually. The fact is, how long do you want to wait to be right while you're tying up capital that you could have put in a brand new trade today that you would have been out of in a couple weeks versus I was holding on to this thing for 6 months and trying to wheel it or something. Okay, stop the madness. Simplify your life and just set good risk management parameters and follow them. All right, so that's it for that. Let's get off of that and jump into some charts on the session. I'm going to be back in to some toss charts here a little bit with you today. We'll go back to TradingView, but I still use my toss charts. And let's take a look at what happened. So the market's nice rebound today. So yesterday, big sell-off day, breaking the 21 EMA. Everyone thought the world was ending. And the Fed is never going to cut rates ever again. And probably people buying puts and buying hedges and all of that stuff. And what did the market do today? We're going to get almost all of that back and go back above the 21 today. Okay. Yesterday never even happened. Yesterday's just a memory. And that's essentially all it was a one bad day, market's back up. Looking at the weekly chart here, we are still in an uptrend. Now, I have a couple favorite charts. I talked about charting with our members today, and I posted a video a while ago on my favorite chart patterns. Well, I really have 4 chart patterns that I love more than anything. Number 1 is the ascending triangle. Number 2 is the descending triangle. Number 3 is the ascending wedge. And number 4 is the descending wedge. If I had to pick a 5th, it would be the symmetrical triangle. Okay, it's not the head and shoulders, the cup and handle, the flying saucer, the Tijuana special or whatever the heck it is. Now it's not like Dan Sheridan or something. Okay, it's not any of those. Okay, it's the easiest ones to pick out. Well, we got a rising wedge here, and we're breaking out of it on the weekly. That is a bearish sign. Okay, you've got a bearish PSAR reversal on the weekly. Okay, that started this week after yesterday's move. However, okay, the daily shows that it's not really as much of a breakdown as it is a break sideways here. Okay, so I'm not fearing this as much as everybody else, but the weekly doesn't look all that great. It looks primed for a pullback, and I'm good with a pullback. I think that would be fantastic, right? But we're okay with it. It's not going to affect anything that we're doing. But the weekly chart here on the left is the only one that I care about. Okay. In fact, I don't even know why the weekly chart here is slightly a smaller size than the daily. Okay. I should make it even bigger. It should be the biggest one. In fact, I'm going to save my grid here with this new sizing because I think the weekly, when you're trading 60, 90, and 120-day trades, which is what we trade, the weekly is all that matters. The daily is just noise. It's down, it's up. It's kind of like watching the 1 minute or the 3 minute or the 5 minute or the 15 minute while I'm trying to do swing trades 30 days out. The 1 minute, the 15 minute, the 1 hour, what does that have to do with a 30-day swing trade? Okay, nothing. So why are you looking at those time frames unless you're going to be trading in a 1 to 2 day time frame? Okay, otherwise, it doesn't really matter to look at a 15 minute. Now, for 0 DTE, I'm looking at 15-minute charts. and 3-minute charts. Okay, that's 0 DTE. That's same day trading. Okay? That's not what we do in the Income Navigator service. These are 60, 90, 120-day trades. What's going on in the daily really doesn't matter. It can give us a sense that maybe since things are falling here, is the daily showing any signs of reversing that trend? Well, no, not really. Okay, so as far as I'm concerned, we're going to continue to pull back. Okay? Even though we've got this pretty nice looking candle here of a hammer, really a hammer yesterday at the top. So what is the hammer at the top? This is a hanging man. Okay, so when the hammer is at the top of a rising pattern, it's a hanging man. Okay, and essentially that is also a bearish candle. Okay, looking at the weekly, things don't look great, but it's not going to, and we're overbought like heck. Okay, not going to do anything here. We're not down where strangles make sense for me, so I still can't strangle ES. You could put on 112 trades, which I won't stop doing those. Even a pullback is making those even better. Okay, I'm not going to be buying leaps or selling naked leaps or naked puts here on something that's flipping over. If you were trying to do it on a week basis or something, and there's guys out there that can do great trades. And if you want to actively trade, check out our active trader service. I closed 3 trades in that service today or this week so far for winners. Okay, we've got an Apple trade winner, a Costco trade winner, and a Tesla trade winner. Okay, all 3 of those 50% or more profit in just a couple days. Join Active Trader, figure that out. When it comes to the Income Navigator and our longer term, steady growth gain type portfolio, not active trading stuff, the weekly is all I care about. All right, so weekly, breaking down a bit here. We'll see what happens. Do we get any follow through to the upside? Do we bounce back above this 21 and keep moving? Who knows? But right now, it is a breakdown of the ascending wedge, of the rising wedge, okay? And a PSAR reversal with MACD and squeeze falling and RSI and overbought and starting to potentially tip over, okay? I think it's a great time to start to look at some different trade setups that could be coming down the pipe. Let's look at the oil today. So what's oil doing on the weekly? Cares about the daily. Let's look at the weekly chart on oil, right? This has been in a nice uptrending channel, which we broke out of last week to the upside of the channel. So the bearish move, the bullish move here got really bullish last week. And we're getting a little bit of a consolidation pullback this week. Nothing major. Inside candle. Nothing telling me that this is ending. MACD is rising. RSI is rising. Squeeze was in a squeeze and is now firing to the upside. Bullish. What trades, Tom, do you have that work here? Well, it's not a strangle because it doesn't fit my strangle characteristics, okay? Which I talked about in another video that I gave out to everybody for free. Okay, so if you haven't seen the massive strangle strategy update video from a couple days ago, go check it out and it'll tell you how I'm trading it here. This isn't fitting strangles. It is fitting 112 trades. It's also fitting some naked put trades that are out in time a bit because we're bullish weekly. Okay. Oh, but Tom, look at it. It's rolling over on the daily. Who gives a crap? It doesn't matter what it's doing on the daily when I'm trading long term. In the active trader service or in somebody else's Discord where they're trading actively and buying calls or buying puts and doing whatever shucking and jiving that they're doing, and they're trying to do some scalping. Good, scalp away. Okay. That's not me. I can't do that. I suck at scalping. Okay. I'm really good at putting these trades on that take me about 30 days to make my money. And I'm really good at making 30 to 50% a year. Okay. I'm not great at scalping. Okay. Because consistently, I don't think you can do it forever. Okay. Some people can, most cannot. Most traders will fail eventually. And how hard has it been to scalp this year on stuff that goes straight up? Okay. Gold. Look at this gold hitting a new all-time high today. The gold just continues to crank. Okay. Look at the weekly chart. Astronomical. Look how far above the 3 ATR. We're getting farther and farther above the 3 ATR. The daily looks just as overbought. We are massively overbought. You are now sitting at an 80% RSI, an 80 RSI, sorry, not 80%, an 80 RSI. Ridiculously overbought and still going higher. Okay. What are you going to do here? You're going to chase it higher? Okay. Great. What's the risk reward on chasing something that is extraordinarily overbought? Where's the trade in that? Okay. 1-1-2 trade? I don't think it's a good one here. Gold sets up terribly for 1-1-2 trades anyway, so it's never a good 1-1-2 strategy to begin with. But if you're looking at gold, the IV rank is decent, okay, because this thing is going bananas. Okay, let's look really quickly here at the volatility in gold. I don't even know if it's going to load here. No, maybe not after hours. Let's get back to gold. I don't know why it's not loading. But way overbought, moving higher, nowhere near a strangle opportunity. I'm not selling naked puts up here at an all-time high, well above the 3 ATR, with RSI at the highest point that I can see going back months. This is a monthly chart. Okay, where's RSI? When's the last time it was this high? Oh, here it is. Back here in July of 2020. Okay, RSI hit 89. Okay, a little higher than where it is now. What happened right after that? Gold sold off hard. Okay, well, we're getting back to these lofty levels that we were back here in 2011. What happened after that? Right, gold went on a downtrend for 8 years. Okay, an 8-year downtrend, and the last time it was up there as well. Okay, last time it was up here, a 3-year downtrend. Okay, we're getting to the point where gold has typically sold off over a 1 to 3 year period when it gets to an RSI level of this. Oh, but it's going to be different this time. Okay, not my risk reward here. So there's nothing I can play on gold. I just don't even touch it. I don't even want to talk about it. All right, bonds. Let's take a look at the 30-year bond. What's this thing doing? Downtrend on the weekly. The downtrend on the weekly with no reason to drop. Okay, are rates rising? No, not really. Bonds are dropping. Rates are on a little bit of an uptrend here. Okay, over the last couple months. Okay, we're in an ascending triangle. We're trying to break out of that. Okay, so rates, they're down. Then they've been rebounding a bit. And then bonds, conversely, okay, we're down and they've rebounded and are selling off a bit. Are rates going to go back? Do you think the Fed's going to start raising rates? I guess that possibility exists. Okay, PPI today didn't support that, but CPI yesterday supported no rate cuts. Inflation is still cranking, but it's not where it was. So I don't think, A, we're not ready to cut rates. We're also not going to raise rates, but bonds are selling. Okay, I'm buying. Okay, I like bonds. Bonds are they've been in a perfect range to strangle since all the way back here in January. So for 3 months, this has been a perfect strangle trade for us. And if I look at my trades in strangles, we closed 4 winners so far in bonds. So we've closed 4 winning trades in 3 months in bonds. I'm pretty happy with that. Okay, why? Because look at this RSI, just dead flat, and you're just traveling along to 21, and then boop, had a bad week. We got a bad week because a report came out saying inflation's not really going away, but rates didn't go up, but bonds dropped. Pretty interesting. Okay, to me, I still think bonds at some point are going back up, and I don't know that we're going back to the lows because I don't think we're raising the rates. Okay, so there's no reason to get worse than where we were. Okay, we'll stick in this downtrending channel. Now, am I going to put on a 1-1-2 trade here? It's probably not the best trade to put on, but we do have one in here, but that was put on before this week. Now, with this week, with us being at the bottom of the range, it's not a bad idea. Okay, don't look over here. Ignore the right side of your screen. Focus on the left. We're focused on the weekly. Okay. Bearish trend. MACD is heading lower. RSI is heading lower. Squeeze is heading lower. You're in a squeeze. Okay. Can it go lower? It absolutely can. Okay. Right now, I won't put anything new on because we just left strangle range. Okay. So I can't do anything in here for now. But what's the strangle range? Go back and watch the video. All right. Copper. Where are we in copper? Looking at this thing, look at this long range that we were in. We finally broke out. Everything's screaming higher. Copper's just racking up the miles to the upside here. Traveling first class to the moon on copper. Okay, then little bit of an interesting doji pattern that we got going on here. This week, it is an epic struggle between the bulls and the bears. The bears have tried to push it down. The bulls have tried to push it out, and no one's winning. No one has the advantage. Okay. 2 days of up, 2 days back down, okay, on the market. Nothing going on in copper right now, but you're in a strong bullish trend. It's outside of strangle, so I can't strangle it. I don't know that I want to put a 112 trade on in here at something that's sitting at some highs in here because it could come down. I mean, it's not the worst trade, but I'm not going to buy naked puts up here as we're touching the 3 ATR and we're almost into over bought territory. No time to sell naked now. Okay. The time to sell naked was when you were back down here. Okay. And you were just starting to get this thing going, or you came back down and touched the trend line here. That was a time to potentially put on some naked puts or sell a put credit spread out 30 days or so. All right. Nasdaq, little bit different look than the others. Ignore the right side. Let's focus on the left. Rising wedge, breaking sideways out of it with another hanging man topping, if not bearish pattern. Okay. 2 weeks now of a bearish PSAR reversal signal, but a big update today. Not only did we reverse all of yesterday's gains, we added a bunch to them, and we now triggered a bullish daily signal on the Nasdaq. Okay. You're sitting at overbought territory, no strangles here. I think a 112 or a BA 112 here, if we're going to pull back more, is a perfect trade. That's what we've got going. RTY, long time range. We broke out of it on the weekly. We're back into strangle territory. I think you could strangle this thing well. Held up good today. We didn't erase all of yesterday's gains, so not as big of a rebound as the other two. Okay. But you're in you've been in a bit of a bearish trend or bullish trend, I'm sorry. And if we really take a look at this thing, okay, it's a bit of a rising wedge as well. It's not an ascending triangle. It is a bit of a rising wedge, and you're breaking to the downside. It is a little bullish or a little bearish, I'm sorry. Okay. But it's not terrible, and you're holding support here. And this support has held up as a resistance level for a year plus. And so I do like this area of support here. We're getting close to it. Any reversal here, and now today's daily candle, which I'm not paying attention to the daily, so kind of ignore it. But to me, this is a hammer candle right here. We will wait to see tomorrow. Do we get some follow through? Indecisive on the weekly here, a little bit more of a, kind of a doji type of pattern. It's not really a hammer, but the wick is longer to the downside. If this thing starts to move up or turns green by Friday, I think this is a good hammer candle and we can go higher. I love a strangle in here because I think you can go lower or higher. You're not far from the 21 and you're in a good RSI range. I like strangles on RTY, but we've already got one working. Now, we do have some ratio spreads, which are a little bit bullish considering what's going on, but I think overall I'm still hanging on to this support level here. If it breaks, we'll be wrong. We'll stop out, small loss. All right, we take a quick look at 6A, and I don't want to bore you guys, so this may be too much for this particular video tonight, but descending triangle support has just held up so well. Boom, boom, boom. Just keep bouncing off support. Okay, and now you're breaking potentially a little to the upside and then back into the triangle. So the triangle remains intact. You were trying to break through it, right? Beautiful strangle setup. This thing has been a great strangle opportunity all year long, 3+ months. Perfect strangle, just traveling right along the 21, and you're right there. 6A, perfect strangle. In fact, we closed one today for a 50% winner. Okay, I like it. So I like where we are on this particular trade. So I like it. 6E, not as good. Okay, 6E does not look quite the same as 6A. It's breaking down a bit more here. It has been a good strangle trade, kind of on and off all year. I'm going to draw the 50 line in here. Okay, so taking a look at the 50 line, we've been traveling along it pretty well. So good strangle opportunity now, but we are starting to head down, squeeze downside momentum. The euro looks a lot worse than the Aussie dollar does in here, and I'm not really willing to do much of anything in here right now. I will stick to my nice Aussie dollar trade, which I think looks a lot better. All right, and then nat gas, forget it, I'm not trading it anyway. And this thing has not been a great strangle trade. You know, oh, look, it's nice here, and then boom, gets crushed on you. I don't like it. It's down below here. Well, Tom, you can do a 112, and we're getting great premium. You can, but how much farther can this thing go down? You're not heading into the great part of the year where nat gas is in high demand. Okay, what's that going to do? Okay, there's no demand. And supplies are full on nat gas, and we had a mild winter. Where do you think nat gas is going? Okay, don't think, though. Look, what does the chart tell you? Well, the chart tells you that, yeah, that's pretty much been right on. Okay, we're just falling. Maybe we're finding a base in here. All good. Trade it away if you want to. All right, and then wheat is another one to take a look at in here. What's wheat been doing? Man, this thing has just been up and down, but it's really at the bottom. It's almost out of strangle range. It hasn't really been in much of a strangle range for a while. So maybe it's trying to break out of this descending triangle, but right now it's nothing. You can't get anything going. We are in it for a longer term credit spread. We already won one on a put credit spread. We're in the second one right now. We'll see if this doesn't hold. This trade will go in the loss column potentially if it falls hard. If this support line continues to hold, okay, then I think we'll be in good shape. If we come down to the support and start to bounce, I'm going to get so many long trades on here, your head will spin. All right, so there's copper. All right, let's take a quick look at the account today, wrap it up here for you. So sharing what the market's doing, let's take a look at today. So Delta came back in line a little bit more, 720, which is 0.15, totally fine. It's within my parameters, nothing to think about there. Theta came down a bit today, but I did close 2 trades out today, and it didn't put anything new on. So we closed out some trades. Today, sitting at 1,700, 0.36, great percentage, love where we are. Net lick, it said it dropped today, but we're pretty much right around where we've been. But I think these numbers are affected a little bit by some after-market, after-hours ZB numbers. So we'll see what happens. But either way, it's fine. We're sitting at the same price roughly we were a week ago. So we haven't moved up or down yet. And then BP, 288, we dropped on BP. We closed out a couple trades. So we're sitting at 51%. We're almost ready to put some new trades on. All right, so we've got a little bit of gas in the tank almost here. All right, and we made $2,770 today. What did we do today? All right, well, today we closed out a 6A strangle, so an Aussie dollar strangle for 1,360. And then we also closed naked calls that we had put on a 112 trade when the market was overbought. Normally, I will leave these on a little bit longer, but I want to free up some buying power and the ability to do some other things. So I took them off at a little over 50% winners, $1,400 in this trade in 24 days. Okay. Playing the percentages. I don't love naked calls. No, I'm not swing trading naked stuff anywhere. I have a specific strategy that's longer term, that's based on the weekly chart, okay, that allows me to sell some calls potentially against my naked puts and turn my 112s into a bit of a strangle when you have an outsized move to the upside in the first 30 days or so. So specific strategy, and we took some profits on that. So overall, pretty good. We're up $6,500 on the month so far. Okay, we are almost halfway to our goal, and we're not even halfway through the month. And we took a hedge loss and a ratio spread loss, and we haven't even started to close any 112s yet, which should yield, I would say, around $6,000 this month if they close. So that will put us probably pretty doggone close to our trading 3% goal for the month. So overall, doing really well, like where we are in these accounts. Okay, hope this was helpful for you. Again, for me, avoid the pitfalls that are killing the 90% of the people that can't make it in trading. Okay, don't have a plan. They bounce from strategy to strategy. They don't put on consistent strategies over time. They don't size properly for their risk. They either outsize the trades, they don't follow their stop losses, or they don't have stop losses. They don't know what they're doing because they're trading someone else's plan. Okay, make your own plan. Don't trade someone else's. And then the last thing here is they're just not disciplined enough to follow their own plan, or they're letting emotions dictate what they're doing. You know what? I think it's going to reverse, so I'm going to leave it alone. It's overbought. Tom says it's overbought. I didn't say it was going down. I just said it was overbought. Okay. It's a more high likelihood, but stuff can stay overbought for months. Okay. Just like ES has been overbought almost all year. Good stuff. I hope you liked this video. If you liked it, I know it's a little longer. Click the like button down below. Share some comments if you like it as well. If you don't like it, you can share comments. I don't care. Okay. If you're not a subscriber to the YouTube channel, subscribe and tell everyone else that this stuff has helped you if it has. All right. And then if you're interested in joining Income Navigator, come and see what we're doing in there. We're going to help you put a trade plan together. We're going to help you get consistent monthly profits, okay, in a reasonable profit expectation, not some kind of 10% or 5% a month or a day or crazy stuff like that. Okay. We're going to look to make 2-3% a month, which is 25 to 30% a year or more, which is going to beat nearly every hedge fund on planet Earth, every mutual fund on planet Earth, and you're going to outperform the S&P. Okay. Why not do that and let the power of compounding be your main trading vehicle? Because if we can maintain 15, 20, but 25% to 30% is my goal. Okay. But even if you can maintain 20% a year, put that into your profit calculator and see what your account would look like in 10 years at 10% or 20% or 30%. If you can be consistent on compounding, not we're up 5% this month, down 2%, up 3%, down 10%. Okay, that's not going to help you compound. What you want is consistent monthly income that's compounding for you over time so that in 10, 20, or maybe 30 years, depending on what your horizon looks like, you're going to see millions of dollars in an account, no matter what account size you start with, especially if you can continue to feed that account a little bit each month, putting 20% of your salary, 10% of your salary back in that account, letting that grow, letting that compound at those 10, 20, 30% rates. Okay, that's really going to make a difference for you and your family and achieve some financial freedom. All right, you guys have a great rest of your evening. Take care, everybody. We'll see you tomorrow. Bye-bye.